Hi, Professor. I'm going to talk you through our performance report and how we did this semester. Um, Before we begin, I'm just going to let you know who did what. Uh, Norris and Liz did research and development. I did marketing. I'm a marketing major and I have background in sales. Greg did production. He's just a business major, and Tony did finance. Um, I'm going to skip all this with the 5 minute requirement. So I'm just gonna take you right into the rounds. Round one, we did really well. We placed first, well above the competition. I think it's because of that night that you and I sat there together for probably 3 hours. We were there until 11. The janitor came in and almost kicked us out. Our cumulative profit was 16 million. Stock price was $54. Return on assets 11, little over 11%. Cash flow was really well, 11 million, almost 12 million. Total sales 132 million, and earnings per share $6. So our stocks were earning us good money. We had good cash flow. We positioned our products based on the customer's buying criteria. Sorry. The conditions report definitely helped us a lot. You know, as you hammered into our head, capstone carrier. It did a lot. I did the pricing of the products. I think we left a little bit on the table. I think we could have done more. Um, Competition. Andrew's sales and productions forecast did not have a correlation. They forecasted way more than what the sales forecast did. Erie did not follow the ideal price ranges for their products. Their sales suffered, and Baldwin and Digny issued stocks and took a LTD. This helped their cash flow. So you'll see later on that we probably could have issued stocks in rounds 1 or 2, and we waited till round 3. That kind of hurt us later on. Digby ended up taking the lead from us. What we made changes to the next round. We were going to focus more to review the courier and our buying our buying criteria for customers. We were going to issue, like I said, stock and some long-term debt for plan improvements. Round 2, we were still in first place. Our cumulative profit grew. Contribution margin was nice, 35%. Stock price rocketed, $73. Return on assets, about the same. Cash flow dipped down a little bit. Net profit dipped a little bit. Total sales was nice, went up about what was that, about 12 million, and earnings per share kind of went down a little bit. I think because we introduced a new product. Yeah, exactly. So we introduced a new product that was coming out in round 3. We also issued 13 millions of bonds and $2 million of long-term debt. We were close on this one. Our issuing the long-term debt and the no, sorry, it was our production and our capacity. We were very close together. So I remember you telling me if your capacity is less than your production, then you're going to start spending money for no reason. Competition. Baldwin did not take any loans to cover plant improvements, so they lost some money. Erie's accounts receivable was less than desirable. Andrews, Baldwin, and Erie did not issue common stock to aid in money improvements, so they were using all cash. And Digby's extra money that went towards plant improvement was the root of our team pulling ahead of them. But they used this extra money now, and on the back end, got much more in return, which boosted them into first place, I think in about round 4, and then they just took off from there. Round 2, we were going to sell off some capacity. Yeah, we sold off capacity for Cure. We were getting rid of this product, and we're introducing Cedar, our low product. Round 3, we kept first place. As you can see, the numbers were still good. Our stock price went up. Return on assets went up. Cash flow was nice. Net profit boosted. And earnings per share, it went up about $1. Our strategy, we introduced a new product, coal in the high end, that was going to come out in round 4. Discounting our coat from performance segment, and our net profits decreased. Our competition, Andrews and Erie, had to take emergency loans, which plummeted them. Baldwin didn't make any plant improvements, and our marginal lead on Digby was shrinking because their stocks were starting to kick in, and they positioned their products. Actually, no, they didn't position their products. They were starting to overproduce and run 2 shifts, and were selling at high volume. Invest a lot in automation for SID, funded with long-term debt. Company completely retire off Cure, and we make plant improvements by buying capacity for our new product coal, which took cash. Round 4, this is when we dip into second place. Cumulative profits were kind of, leveling out. Our stock was leveling out. We were trying to figure out how to make more total sales. This is when we started to look at marketing. We put more money into our marketing budget. R&D, we continued our business plan that we were focusing on from the beginning, the high, low, traditional, and then get rid of the product once it reaches the low market. And we were still financing all of our improvements through long-term debt. This is when Digby took the lead. Digby was, overproducing 100% of their plant. Very high in sales. They were selling about 2x what we were selling. Digby, Andrews, and Erie improved their plant, and they funded it through common stock and long-term debt. Our stock price was beginning to exceed ours, and ours was flattening out. We were going to try to need to increase market. Yep, we were trying to increase our marketing budget in order to get customer awareness. This is when a lot of our cash started to go. Round 5, our stock price was flattening out, and we were trying to figure out a way to keep it rising. Yep. We were also coming out with a new product in this round that I said previous. We were forecasting for 600 units, but since it didn't come out later in the round, we only were to produce 297, and we had to stock out. We still were 21.5% of the high market share, which was good for us because that's what we were focusing on. Competition, Digby still continued to have high volume of sales. They matched this by producing over 100% of their plant and lowered their price, which in return high volumes. So they were just overselling what we could make, and we never made adjustments for that. Still basically the same strategies of round 4, getting the company ready to sell off in round 6. Round 6, we still maintained second place, and there was really no coming back. Digby was taken off. These were our numbers that we had. Total sales were good, but they just weren't good enough. We could never figure out how to catch Digby, and I think it was because we weren't overproducing like they were. We accomplished our performance, turned out a great profit of $17 million, almost $18 million. We sold off $200,000 of product SID. No stock/dividends ever paid, and we moved product cane from high to traditional segment. Our competition, Digby and Gold, managed to keep their lead. They had on us with the same marginal edge as the 2 prior rounds. Correct. This was in part because of their year-end inventory management surpassed ours. Yep. These were our results that we got. As you can see, Chester here, we started off really strong and started to level off, and Digby came on strong, and round 4 they just took off and we couldn't catch them. This is when they started overproducing. Not introducing products earlier and positioning them in the wrong. Yep, that's exactly what we figured out what was wrong with our product. That's exactly what we figured out what was wrong, and we just couldn't catch up from there. These are the graphs that we made in Tableau. You can see Chester was just taken off in rounds 1 through 3, and then we started we started to flatten off in round 4. You can't see it here. Summary: Chester team started out in first place, kept us, and surpassed most other teams all 6 rounds. We strategized positions based off the customer's buying criteria to ensure sales. Long-term debt and stocks in round 2, and we introduced a new product in round 3. In round 4, Digby started to overtake us, and that put us into second place, and we really could never recover after that. Thank you.